Good morning, everyone, and welcome to today's episode of FarmCon Conversations podcast. I'm co-host Todd Loechler with my good friend Kevin Van Trump. Kevin, you on board this morning, sir?
I'm here, buddy. How you doing?
I'm doing really well, man. I'm actually just down the road from you here a little bit. So I'm going to see you tomorrow. So we're in Stockton, Missouri. Traveled through some tornadoes. Got here safely, but it's good to be in the Central Time Zone again with you. I'll say that. It saves me some scheduling errors. But anyway, any exciting from the Van Trump weekend? We just still demo.
I'll just make all work, still demoing the building and doing some work around the house.
So we're to the point we can just say same old for you now on this show.
It has
all right. Well, dude, we got time to talk about on some of the deeper on the macros and perspective stuff. So let's dive in to ag. I know we got some new crop conditions and planting progress stuff. So let's hear what your comments are, your positions are, and any thoughts on the recent news.
Talk about corn. I guess we'll talk about corn first. Yeah, you got some planting delays, mostly Iowa. I mean, if you're looking at it, you got Iowa, North Dakota, Missouri, and Kansas that are running a little bit behind schedule. But I think, Todd, as you were pointing out, I mean, you have some drought worries or some dry conditions. We got some rain in the forecast, Todd, like you were saying, for out in that eastern, or I should say that western, some of those western areas. I think it's kind of a little double-sided. I think you had the bulls wanting to talk about the planting delays, and obviously if you have some planting delays, that's going to bring up talk of fewer acres, and that's kind of what the bulls are wanting to hang their hat on, is that we're going to see fewer corn acres this year than the USDA currently has forecast. What I would agree with. I think they're a little high, and that needs to come down. But I still think it's like I wrote in one of the reports here earlier in the week, if this would have been 20 years ago, I'd be a little more bulled up, just because we're off to a little slow start and there is some rains in the forecast and things like that may have some more delays. But the way technology has changed, and most of our bigger producers have the equipment and technology. I mean, they can get the crop in a real hurry, Todd. And I just don't think the market gets as excited or concerned maybe as it used to be, so to speak. So, we head in here these next, I'd say the next, 4 to 5 weeks are historically our bigger planting weeks. We'll plant over 10 million acres, and then you'll start getting up to where you plant about 14, 15 million acres in a week. And that'll run its course in through mid-May to about late May. And typically, kind of as I wrote in this morning's, I should say earlier this week's report, we tend to, by the end of May, you want to be closer to about 85, 90% planted, somewhere in that ballpark. They like to say that third, fourth week of May, which should be somewhere around 80%. I suspect we're probably on track for that now, barring any crazy unforeseen weather forecast coming up, but I don't think that's going to be the case. The bigger kick a little bit, maybe the Bears are pointing towards the big uptick in Argentine production. I mean, there's some groups now out of Argentina thinking the USDA could be 5, 10, 12 million metric tons too light, that they're going to have to bump their Argentine corn estimate, like I said, 5 to 10 million metric tons higher, just simply because I guess they've found a lot more acres, so found an extra 200, 300,000 hectares in Argentina that they hadn't accounted for, and it was kind of like last year here at the USDA, bumping our corn acreage estimate higher. And so, there'll be some interesting adjustments come out, Todd, in this May report, I suspect, in mid-May when USDA comes out with its next WASDE. That'll be our first real look at the new crop balance sheet. And also, I think you may get some sizable adjustments out of South America. So, Todd, I like pricing some up here. If you feel you might be behind, if you think you need to get caught up, I like using the current rally to price some, simply because we're still going to be at a 2 billion plus bushel carry. And as I always said, I think corn likes to trade. When you're at a plus 2 billion bushel carry, I think corn likes trading 350, 450 range. If the funds are bullish, which they had been bullish, you could flex that up to $5. Well, here we are. And I feel we're a little toppy. I also, Todd, I think people should be paying attention to that D27 price. Once my rule of thumb is once I'm about ready or we're starting to run in plants here, I think about next year. So not just the 26 crop right now, but now it opens the window for the 27 pricing. And that's been the case for the last couple of weeks. But you got D's 27, Todd, trading at north of 490. And it's been chopping around in that 490, 495 range. You may even pressure it up closer to $5. But that's not a bad starting point for 27. So, I like personally to get 10, 20% of the risk off the board when you have a shot like that. I kind of like it. So, I've already priced, 10%, and then I hedged another 10%. But we move that D's 27 up closer. We get up in that 510, 520 area, which I'm not saying that it's going to happen, but there's a chance it could happen. I'm going to price even a little bit more. So, I think that's something that we should probably all be looking at. The D's 26, it's trading at a good level right here at 480s, right around that 480 mark. And I think everyone's just kind of waiting to see a little bit more on what happens here with weather and really what happens there in the Middle East with energy prices. So, I like where we're at from a marketing standpoint. I'm leaning with a little more bearish tilt as a spec. Yeah, I think you could see another 10, 15, 20 cents of upward momentum, but I'm reluctant to move much beyond there, and I think the risk is to the downside from my perspective. I'm just saying if weather cooperates, if, right, we don't know if it will, but let's just say if weather cooperates throughout the season for the most part and these war headlines go away, I think you're going to take some risk premium out of this market. So,
well, let me ask you, though.
Yeah, go ahead, Tom.
Before we move on, okay, we're taking all. I hear everything you're saying. Earlier, you were talking about plant delays, fewer acres, the bulls. But what we haven't discussed yet, and you put in the report today, the American Farm Bureau Federation's report on the fertilizer availability and how many guys apparently haven't done it for you. I mean, are you foreseeing any potential? And how would you even know to track? How would we track that? If guys don't slap it down, there's got to be a production loss there, does there not? And is it
well, you're definitely correct. I mean, I think. You're definitely correct on taking the bullish stance that you could see fewer global corn acres come into play. I'm not necessarily sure we're going to see any lack of supply or lack of production maybe out of the U.S., but I think you could see a setback globally. And yes, if you're not going to side dress or you're going to cut corn or you're going to try and save and try to budget your way through this, yeah, I think it could create a yield drag. And so, I think that's another reason that you are seeing the prices pressured to the upper end of this range. Like I said, I don't think there's anything that the market isn't already digested. I mean, I think that's why prices are elevated and where they're at currently.
Yeah.
Now, like I said, I think here, I always said you need three things to make a major bull market. And you need strong demand, which I think we have. I think we have very good demand. We've got great export demand. We've had strong, good export demand. Ethanol's strong. I'm a little disappointed that our exports haven't been a little more than they have as of recently. There's a chance that we could trim. Maybe there's a chance they have to trim the export demand number. I don't think the ethanol demand number goes much higher from here. But the feed and residual has me squirreled up because, there's a lot of talk that with the cattle herd where it is and the numbers down and you had other alternative feed in the equation at some points in time, that feed and residual number is just too high and may need to be trimmed substantially. I don't know that, though, because we've been saying that for several quarters.
Yep.
And the USDA addressed it in one quarter and actually raised it and didn't lower it. So I don't know if that number gets adjusted much lower. I was in the camp that it could be 200, 300, 400 million bushels too high at one point, but the USDA went the other way on that. So I just don't know if that number is going to get adjusted that much. So I'm not bearish because of that. I'm just bearish a little bit, thinking we're a little overstretched to the upside is all I'm saying. I think we're at the upper end of that range when you're at a 2 billion bushel plus carry. There's ample corn in the pipeline, and and globally, global supplies, like I told you, there's a chance they adjust this South American crop substantially higher. And I mean, global ending stocks are going to be high as well. So net, I think you're bumping the upper end of that range. So yes, I hear what you're saying. Yes, I think some people are going to have to cut back and maybe the yield. And I'm never a believer in starting the yield up where they're going to start, up into 182, 183, wherever they're going to have this thing average at. I don't think it should be that high. I think it should be more like 178, 179. So maybe, you get a little reduction in feed and residual, you cut the yield a little bit, but they're not going to cut that yield number down there early. They'll have it up in the 180s, And so net, I just don't see the balance sheet being tight enough really to justify corn prices much above $5. So, that's just kind of my theory at the moment. So we will see.
All right, cool. Let's move on to soybeans and tell us what is happening there.
Well, beans, I had a big bearish position in them there for a while. We took that big break. I took about 3/4 of that position off, banked the profits, and just thought I'd let's watch the rest of this play out. Well, we've rallied. The bean market's rallied all the way back, all the way back, and it's been, extremely resilient in my opinion. You've seen the funds defend their position to some degree. We're not all the way back. I shouldn't say that. I mean, July's trading at close to $12. I think we traded up closer to $12.50 at the peak, so we're 50 cents off. But they've definitely defended the position, and we're stable. We're just essentially trading between this $11.60 and $12 range for almost a month now. Just kind of chopping and slowly working our way back higher. I think there's a good demand story, domestic demand. I'm super hesitant on the Chinese side of things. Just you saw this week, China came out with their ag outlook from 2026 to 2035, I believe, and ultimately they're going to try and cut 26%, a little over 26% of their soybean demand between now and over the next decade. So I don't see that as being foolish, necessarily, because you're going to see South America continue to plant and roll out more acres into production, and so they're going to continue to increase their acreage for beans, and China is going to try to reduce their total demand by 25%. I see that somewhat problematic. Obviously, we're going to try to increase domestic demand through the renewable program and through some of our biofuel and other programs. And so, hopefully we'll be able to offset those losses. But I'm worried nearby, the USDA has that export estimate still elevated, and they're still probably going to need to trim unless President Trump pulls some type of, like I said, rabbit out of his hat. But I just don't see how the dates or everything penciled. I just, China still has some old crop purchases on the books. By the time President Trump gets over there in mid-May, about a month away, if China were to put in and buy, I mean, you're really up against, from a time perspective, making that play. So, and for the life of me, I just can't see China taking more U.S. Supply. Unless, like I said, it's just a gift, a token of some sort that they're offering some type of peace deal or something. But, there's talk that, China's going to take another 4 million metric tons, and people are saying another 8 million metric tons. I've heard people say they're going to take another 10 million metric tons of old crop. I don't see it. I just have a hard time getting my head around that. That's why I think, we're sold out of old crop, but, I like pricing a little bit more new crop right up in this area. I'm not saying jump that 27 like we're talking in corn, because you go out here to Nov 27 beans, you're still only trading 1140. Right. So nothing. I mean, it's okay, but the 1140 doesn't seem, as salty as that near $5 corn does on the D's 27 side. So, we've got enough. We do have a small sale out there at about 1120, 1125 in that Nov 27. So that gives us a little bit of just something, like I always say, put a stake in the ground that we can trade around and hedge around. Nova 26 trading like close to 1170. Really, that we're not doing nothing there either, so to speak. So there's a lot of weather risk still ahead. Planning is off to just a ripping, start. I thought, I don't know when we've been off to probably this quick a start, but you've got, Illinois 13% ahead of their regular pace. Indiana 16% ahead. You got Kentucky, Tennessee, well double-digit, 40% ahead, 25% ahead. So most everybody's ahead of planting except Iowa. Again, Iowa's lagging a little bit. They're about 3% behind their traditional pace, as long as a little bit a drag or slow start in Wisconsin and Michigan. But like I said, I suspect those things will get caught up. Not really much story out of South America. Obviously, their crops, Argentina's finishing up with their harvest. Brazil's in the bag. So, not a lot of risk on that front either. So it really just going to come down to Chinese demand, how the U.S. and China's trade relations play out, and then what happens in this back half of the summer here for beans with the weather market. So, like I said, I don't know if it's a ton, Todd, of crazy downside risk here just because the funds are going to continue to defend this position. I'm not sure there's just a great deal of downside of risk nearby, but, I still feel the balance sheet could get more burdensome just because I think you're going to see USDA have to raise that acre number. I think there's going to be more beans planted. We're getting off to a really quick start on the bean planting. And, there's a chance that number goes higher if the deal in China doesn't happen. So there's a chance any stocks work their way higher, not lower nearby, which makes me lean a little bit to the bearish side. But like I said, these funds are in here and they're trying to defend this position. So any headline that is tied to crude oil or, makes people nervous that crude's going to go higher or anything, I think that's allowing bean oil to work its way higher, and meal's had a good bit under it as well. So here we sit.
Well, and I'm still learning some of this. Help me understand. I'm trying to figure out if China does. It looks like they're making the moves, as you said earlier, with what their administration and their leaders are doing. They're going to back us out. It's coming. It looks like it's coming. Is this price supported by where they're at now? If they pull out, or is all that baked in that they might go out?
What do you mean by pull out? Saying they'll pull out?
If all of a sudden, they're just, it's our best years are behind us for selling them soybeans because they just ain't buying.
Well, obviously they're just saying their demand is peaked. So let's just say their demand peaked at this, in 2025 at the level it peaked, and now they're going to try and move lower on being reliant on some of this U.S. agriculture. So I think we have to find other avenues of demand, which I think we're finding. That's what I'm saying. I think we can eventually replace some of that Chinese demand with what we're going to do domestically on the crush side through renewals.
Yeah. And the bean oil stuff, how much of the bean oil pricing is based on them? Was that all the geoglobal issues, like you said, because oil, then that goes higher and that pulls up beans with it?
Yeah, I think the bean oil pricing is twofold. Obviously, the complications and conflict in the Middle East, which is, put upward pressure on the energy market in general. And I think bio and the renewable being tied to bean oil, is the big rally. So, I think there was already optimism before the conflict in the Middle East that we were going to see a nice run up, continued push higher in bean oil, just simply because of the crush and the amount of capacity that we've added and what we're going to do with this renewable. So and if you want to, add in some of the other fuel alternatives that they can use the bean oil for. So like I said, I think that was already baked in and there was a lot of bullish optimism surrounding that demand. Now you throw a little, extra gas on this fire here with the complications in the Middle East. So, I think that I'm actually surprised to see how resilient meal has been and what type of bid and the fund interest in being long the meal. I was I was bear spread some meal there for a while. And, I don't know. It's just interesting to me that it's had this type of uptake. So, I have been holding bearish positions, but I'm certainly willing to admit when I'm wrong, I thought they were going to be able to break this thing, and then they would trade a little bit side and then break it again another leg, and then probably another there. But that just simply hadn't happened. So
right.
Here we are.
All right, then. Well, let's move on to my favorite crop, the winter wheat crop. What do you got for wheat?
Now, wheat's been getting great. Boy, what a great, we sat there patient forever, Todd. Remember through, I've been getting some emails from folks like, man, you ever going to price any more wheat? And I said, look, I mean, our windows probably, we have been forecasting that we thought maybe that late Feb, March, April, and the first part of May, maybe that was going to be our big pricing window this year, just the way things were looking globally and the way things may shake out and have that little window of optimism. Boy, it worked out well for us this year, and it opened a window for us, and we were able to make some good sales on this rally and price a little bit more wheat. So, I think, the bulls are obviously watching the weather worries, and I think you've got weather premium in this thing. I also think you've got a little bit of war premium baked in here, and so that's given us a nice tailwind to pricing things. What a great time. You had July 26 pop up north of 650 today in hard red, and you've got, what do we got, July of next year traded close to, we did get above 680. We were above 680, 690. So, I think there's opportunities out there. We made a little bit of, we trickled in a few sales for July 27 for next year's estimated production on the move higher. I think a lot of folks should be out there looking at that. I think we may have hit $7 last week in the hard red winter. So, you're trading here in that $6.80 to $7 range, and it's a good starting point for next year's wheat. Just get a little of that risk off the table. But I think it's the same type of deal, Todd. I think you've got the weather concerns, like you said. You're seeing a lot of rain in the forecast out there for some of your areas, correct?
Well, not a lot out there. The next 2 weeks, all the way from northeast to down to the west side of Texas and down southeast, where it's really bad. They're going to get 3 to 6 inches. It looks like we could get some areas in the hard red wheat could get an inch to a little bit over, which could be the saving grace for some, but it's still going to. There's some moisture that's going to hit more areas than it has. Yes, plus some areas that probably don't want.
A lot of that. What do they got in Nebraska at now? Like 10% ready to get that. I don't know, 12%.
Yeah, I think so, 11 or something like that.
Yeah, some of that. Yeah, may get to where it's just too late. You never know.
Yeah,
a little bit.
11%.
But Russian prices have creeped higher a little bit, but the Russian crop, a lot of folks are talking it's getting bigger, not smaller, and I like I said, there's a chance. I think that the USDA is still a little conservative on that U.S. wheat export estimate. So there's a chance U.S. wheat exports could move a little bit higher, and that would tighten the balance sheet just a little bit. But the balance sheet's already, it's burdensome, and maybe they tighten it a little bit, and then maybe if U.S. crop production disappoints, and then we could trim a little bit more there, and maybe trim a little bit off globally. And so I could see us hanging in here. I just don't know if prices are going to fall apart anytime real soon. But I certainly like using the rallies to reduce more longer-term price risk here, Todd, just because, like I said, I feel we're bumping up against the upper end here, and we have weather. We have weather headlines at play and war headlines in play, and it just makes me nervous that if some of that goes away, I don't know if we're going to have the headlines that continue to attract more bullish money flow. So that's all I'm saying. The funds are still net short wheat. I'd probably be a little more bearish if they were, holding a bigger bullish vision, but they're net short wheat here. So, I don't know. Like I said, it's played out well for us. We were patient enough and waited, and I think now you kind of have to wait and see. Like, I'd love to price more of this year's wheat, but you just don't know at this point where your production's going to land. So the last thing you want to do is go out and get yourself oversold. So, I think you're just going to have to assess kind of what the crop's looking like, and I think you sell up to the amount you're comfortable with. If you think we're at least going to make 60-70% of what we typically make, I almost feel like you price up to that level at this point in time, and and keep pricing into it. trying to get ahead, because everyone knows. I mean, by the time it all comes out, if you're going to wait and see how it all plays out, I mean, prices will be back, down to if things cooperate. I'm just saying if things continue to cooperate or play out in somewhat a cooperative fashion. So, that's what I like. I think if you price up to what you're comfortable with on the production side of things at this point and see where we end up here, and then take a little risk off the table for the 2027, and that puts you in a fairly decent position.
Yes, sure does. As we segue into macro stuff, here's a ag and macro question. So fuel prices, and we're going to get into this conversation a little bit down here in a minute or two, but we'll start it with the fuel prices. I mean, we got the Energy Secretary saying, it's going to stay up there for the rest of the year. Trump saying no. But anyway, for guys that don't have all their fuel needs booked for summer and fall, and then it sounds like there's a bunch of farmers that don't. I mean, do we lock in now? Do we wait for the next headline for the straight to open and then buy?
Yeah, I'm not touching it. Like I said, we were again lucky, I'd say, maybe, when we locked ours in ahead of time, and that typical rule we use into that early mid-Feb time frame, and it worked fine, and we were even locking in a little earlier than that just because we felt we had that break, remember, and we thought, boy, the risk is certainly the upside. I sit here now, what are we trading? We're trading crude at, pull up the screen, I think we're trading crude at around 88, 90, somewhere between, we'll call it 85 and $90 a barrel. And you got a lot of people saying, what, if prices could still jump to 120, 150, if all hell breaks loose over in Iran, if there's no peace agreement signed. But I still think we take our chances, in my opinion, on my end. And, you go hand to mouth here a little bit and you just buy what you need, and hopefully the president's correct and this thing's going to come back down. I think they'll try to work crude oil prices back down into that $60 range. And, I think that breaks it. But like you said, how quick are they going to, at the pumps and the people we're buying our fuel from, how quickly are they going to be wanting to lower their prices? And that's always the problem, right? Like, even though crude oil jumps back down to $60, that doesn't mean the places we have to buy our gasoline at are going to drop, just drop the bottom out of theirs as well. They'll be slower to drop. So we're in a little bit of a different situation, yeah.
And that seems to be the big issue right now between the Bulls and the Bears. I mean, both sides make a viable argument. I guess at the end of the day, I'm curious to hear where you kind of fall on that. I mean, because who knows?
Well, it's frustrating as a consumer just because the moment that there was a war in the Middle East or a conflict in the Middle East, you got Casey's out there just raising prices right immediately, right? I mean, we started to climb immediately. And there's no way that's the crude oil they're using or refining at that moment. I mean, they just raised the prices because
we talked about that,
yeah. And they're going to lower them. Just the same thing that always happens. We see it in the ag space all the time. When corn goes up to $7, $8, and then all the input players raise prices sky high because corn's at $7, $8, and then the next thing, they're slow to back off the pricing. And so, it's just, I don't know, it's just a tough position to be in. And, you hear all that all the time. There's the old ad, the farmers, one of the only ones that's a price taker on everything, and it's not good. It's a tough position to be in, right? So.
What is, and I was trying to figure out.
Input players, and then you go to sell it, you get, you're going to get dinged and penalized. And you're going to be a price taker again on that side. So it's like it's tough business. There's no question. So.
Okay, well, taking it to his macro, like we like to stay at, I'm looking at, who knows how long, like you just said, the price is going to be there. We've seen stuff. We've had the word transitory thrown at us, and that definition expanded greatly, if you want to believe it. But I mean, right now, I guess, and to tie into another question, are we seeing early signs of consumer slowdown, or are the younger generation going to keep us going, or the older generation? I mean, you talk to Jordan, he gets out and travels. I'm just trying to figure out at what point, dude. I mean, there's got to come a time, 2 months, 3 months, where everybody snaps and just quit spending money on the extras so they can buy their gas and have their experiences and whatnot.
Yeah, no, I talked to there's a lot of traders out there and big time investors and traders. I mean, they're still talking that deflation could be a bigger worry than inflation as we move into AI, and how's that going to play out? I don't know. I mean, I see what they're saying. I mean, they think crude oil could get rocked, as this slows down. And there's more peace globally, and Trump's controlling a little more of the global oil scene. I mean, there's a lot of talk that we could be in a deflationary environment, which makes them a little more nervous than say some of the little hotter than anticipated inflation. So, I don't know. I still think we're going to see maybe one rate cut in 26. I think anyway. Job market looked a little more, the last report at least, but it seems like every other report's like lopsided. So I don't know if we can even rely on the data all that much.
Well, that's no kidding.
It's like the labor hanging in there, right? But I don't know.
It seems to be.
I feel like there's a chance for a cut. I feel like there's a greater chance for a cut in 26 than a hike. Let's put it that way. So,
gotcha. No, that's fair. Fair enough. Fair enough on that. Well, I'm just going to jump into so many of my questions kind of interlap macro and investing.
Oh, yeah.
So here, when we talk about how long is this going to take and stuff, you mentioned last week you started putting money back to work, cash back to work in some of your top ETF holdings. I mean, okay, what do you need to see as an investor, headline-wise or otherwise, to start putting more? Because I know you still have heavy cash. So I mean that would tell me what you think is going to happen. So just reiterate to those that don't read the report every day what you've done in the last 2 weeks as far as putting money back.
Well, yeah, probably ahead of the conflict, and we were trading it the last time we were trading up here near the highs. I was probably still in 25-30% cash. Then you started to hear talk of there's going to be this and that, and I probably went to closer to 50% cash on that through that whole break. And then, just paying close attention, I just started adding in as we, once we got down there to some levels where I thought we were trading closer to 18, 19x, and just started putting more money to work. The VIX got up closer to 36 in that area, and I thought, this is probably time to throw a little bit more money at some of the more, what I call more stable holdings. My individual stocks I didn't add much to, but I did add to, like you said, the triple Qs, the S&P ETFs, and XLI, like the industrials and the financials. And so, just started pushing more money in. And now I'm back to where I'm probably 25 to 30 again percent in cash, probably closer to 30%. And so, I didn't do anything crazy. I mean, it's just, lightening it and then putting a little bit more money at play. And, I have people ask me all the time, what are some of our bigger positions? But yeah, really, like I said, I trade my bigger positions are those ETFs. And then underneath that, I'll hold individual stocks, and not a ton. I mean, I can pull it up for you, Todd, if you want me to just say where I'm at exactly here.
No, I think I've heard more people tell how much they appreciate that, just to get a feel.
Yeah, so, like I said, triple Qs, and then my S&P ETFs, I like the VOO and the IVV just because they cost less. They charge less in fees than, like, say, the SPY. It's all basically the same. But and then I like the XLI, like I said. And I think you asked me before exactly what is the XLI. And it's top hold. So about 40% of that ETF, these are the companies. It's Caterpillar, GE Aerospace, GE Vernova, Raytheon, Boeing, Uber, Eaton, John Deere, Union Pacific, and Honeywell. I really like all of those companies. And, I have a little bit of a defense play in there with the Boeing and Raytheon, and we got the Deere Caterpillar plays for the data center push. Caterpillar had this massive run. Just, look at all the generators they're placing and all the, other earth-moving type things that are taking place on the data center play. And you've had a lot of people playing that as a data center play. I like Honeywell longer term, Union Pacific. So, I just like that overall ETF. But, again, it's trading up near its all-time high, Todd. I think 52-week high is close to 180, and it's trading like 172 or something. So, there's no bargains really to be had out there anywhere. I did catch a hell of a runner with Marvell Technology. It's had an explosive move up from where I was buying it at. And that's one of my larger now positions as an individual stock. It wasn't, but since it's up like 50-60% in the last few weeks, it's gone kind of nuts. My individual stocks are Eli Lilly's one of my biggest positions. It's been getting beat up a little bit as of late. Meta, I've had a nice run here in Carvana. It started as a smaller position, but it's up about 30% in the last few weeks. And I bought it on a bigger break. I had traded it for years, and then I had exited it, and then not for years because I haven't been around long, but exited it and gotten back in. Obviously, NVIDIA, I like TKO. TKO's been beaten up a little bit. If you remember, TKO is the one that owns like the PBR, Professional Bull Riders. They own the WWE, the wrestling. They own a lot of these live event type plays that I think are going to be big more and more that we get into AI. I think people are going to gravitate more towards a lot of this live event type of thing. I still own Race, which is Ferrari. I think the brand is, is worth quite a bit. And so I like the stock. It had been beaten up. Ferrari traded up to about 520 or 519 at one point this year. In the past year, and then it got down to about $300, $315, and we started accumulating some more down in that 340, 320 range. And so, I think longer term, I like it for the kids. We obviously own Google. I own some Spotify. Again, it got severely beat up. I think Spotify at one time was trading close to $800, $750, $800, and then it got down to, I think we got down closer to $400 there at one point. So we own that. We own some John Deere as an individual stock, a little bit of Palantir. I like Shake Shack longer term. It's been good. I hold an IBM through this earnings that they have right now. And really, not a lot else. Todd, I have a little bit of Robinhood that we had from way back when. It's doing okay. Tractor Supply, I'll tell you what, Tractor Supply has just gotten lit up.
Has it?
As of
you
late.
Like that.
I do like it, and I've always liked their story. After their stock split, though, that stock has really struggled, and I think it's down big again today. I haven't looked at everything, but I'm looking at the screen right here. I think it's down again big. It traded up to about $64 earlier in the year, and now we're down to about 40. So it's had a substantial setback, and I don't know. I'm going to have to take a deeper look and deeper dive to see what the negative sentiment is surrounding it, but. For years, that was one of the top stock success stories for a long period there. And so, maybe the higher fuel cost, maybe the consumer in the rural areas had to pull back more aggressively than we thought. I don't know. I just have to do a little bit of a deeper dive, but it's been a long-term holding of mine for a long time, and it is definitely. I've given a ton, but I think, like I said, I think it's. Down 20, 30% from where it was earlier in the year. And so, it's had a sizable pullback. I will say this. We did unload a large amount of our Netflix position just on the Reed Hastings exit story. And I told you that even going into FarmCon, remember last year when I had heard that Hastings had sold like $40 million worth of his stock. Then the other 2 days later, he sold like $60 million. Then he sold another $100 million. So I was like, what the hell is Reed Hastings getting out of this? But and then here he announces it, 5-6 months later. But I'm a little worried. He wants to go do something with a little more growth potential. So it kind of makes me a little nervous. So we trimmed that way back, and we're just kind of keeping an eye on it now. But
go
ahead.
Okay. Well, let me interrupt you there. Since you're talking CEOs changing out, I know you've been an Apple guy. Is Tim Cook's leaving? Of course, he's switching positions. Whatever. Does that mean anything to you as an investor, affecting your investments?
No, not really.
Just curious.
You can't really. I guess I've never been personally a huge Tim Cook fan. But you got to tip your hat to what Apple stock has done in the performance of the company and what they've done since he, with him at the helm. So, I don't know if I agree a lot with some of his personal choices and his political choices, but he's obviously done a good job at the top of Apple. And I don't know how the market kind of will foresee that moving forward. I don't know, because there were a lot of Tim Cook haters kind of out there that said he wasn't innovative enough or didn't innovate nearly as much as Jobs did. But I don't know about that. I'm not sure about that. So, I think it's a great company. There's no question there. And, it could do great things. So. But that's the other thing, Todd. That's one thing I know I want to make sure everyone understands. If you're going to load up in the ETFs or, say, the triple Qs or, like, the S&P, make sure you understand, you got to be careful doubling up then into individual stocks because
exactly, I did that. Yeah.
Because I'm telling you, the volatility. Okay, if you get a big downstroke in big tech, you'll get annihilated. And the reason I said is because if you look at the triple Qs, it's pretty crazy to think that nearly 50% of that ETF is tied up in its top 10 holdings. So anywhere from 45 to 50%. And that's NVIDIA, Apple, Microsoft, Amazon, Meta, Tesla, Google, Broadcom, I should say Alphabet instead of Google, and Walmart. So those top 10 stocks make up almost 50% of that entire ETF. So that's where I'm saying if you own those stocks and you own the ETF, well, hell, I mean, you're not very well diversified. So you have to be careful, because I found myself a lot of times I own the same stocks that are in some of these ETFs that I'm holding that are rather large, and on the downstrokes, it can be painful if those particular stocks are getting hit pretty hard. So,
thanks for reminding me to know. You're right, and I've done it, and sure others have, and it was a good lesson, though. It was a very good lesson.
Yeah.
Hey, last week you touched on you shared some of the stuff that you've shared before, but I want to get it out there. You shared your belief, a reminder that if you're investing for the long term, remember that consumer spending peaks around the age of 50. And then it starts to decline dramatically in retirement, So point being that one key to, picking the winning stocks is to better understand what the younger kids are going to spend the money on. In the same breath, you said, good luck, everybody. You yourself are constantly scratching your head trying to figure out what and why they're buying certain things. So I'm asking you to share with us, how do you go about, I kind of know some of it, but how do you go about doing your best to stay informed in that sector and then decide on what to invest or not?
Well, it's tricky because you got to think, you just have to really – here's the problem. As we grow older, we tend to rely on all of our own personal experiences and our own knowledge and wisdom that we've accumulated, right? But that doesn't help us necessarily understand other people's perspectives or how they're going about their lives. And so it makes it tricky. And you got to really think outside your own head, kind of, so to speak. So because I sit here and I'm like, how in the hell? Because I'm bitching about the price at the grocery store. Michelle and I'll get a burger and fries someplace, and and I'm just like, these people nuts? I can't believe these prices are this high, right? But then I sit there and I'm like, man, how do these kids afford this? But then you got to put yourself in these kids' space, because I think back to when Michelle and I were young, and I'm like, man, we didn't have any, and prices are way higher now. How are they doing it? How are these kids made? They got to be getting buckled up. But they're not, because here's why. When Michelle and I were young, when we bought our first house, we paid, I think it was less than $50,000. It definitely wasn't, like I said, it was not Instagram or Facebook worthy house. But we struggled, hell, I told people for years we didn't have enough money to pay attention. We struggled, fair utility, pay everything, but we had to buy it all on our own. My parents didn't give us nothing. We didn't get anything from anybody, so to speak, furniture-wise or this, that, and the other. But think about that, Todd. Now here, most of these younger kids, or a lot of them, a lot more than used to be, they don't want to own a house, right? Todd, your daughter own a house. My daughter doesn't own a house. Your daughter own a house. Now, Jordan does, but That's what I'm saying. So think about if we didn't have a house, how much more money we'd have had available to us back then. And then we weren't buying appliances, and we weren't having to replace a refrigerator, and we weren't having to do a lot of these things. And yes, buying that house certainly helped us longer term build our wealth. But if we never did those things, you see what I'm saying? So I don't think a lot of these kids spend a ton of money on things that when we were younger that we spent money on. So I think it's a lot different. And you know, I sit there in my head and I say, well, what are they going to spend their money? I think they like to spend their money on. I think they like to look like they have a bunch of money, right? When they actually probably don't have shit. But they want to look like they're balling. So they like to go to the really nice restaurants that other wealthy people go to because they can get that look by taking, hey, here I am. I'm at this real exclusive high-end steak restaurant. Aren't I cool? And they can post that. They also like going and traveling on trips like where wealthy people go and travel on trips because they can post that and be like, hey, look at me. I'm with the other rich people. And then, you know, they got to go back home to their shitty apartment or whatever it may be because they spent all their money on an expensive trip or all this high-dollar food. And that's what I'm trying to get at. Things are just different. Like I asked the kids about classic cars. Remember, I've had that conversation before. These kids don't care about classic car or cool cars because they all show up to a party in an Uber, right? It used to matter what we showed up to the party in or when we went out somewhere. Oh, look at that guy. He's got a really cool truck or he's got a cool, you know, car. Nobody cares now because they all show up in Ubers. So, you know, I think they're not spending money there. You know, like I said, I don't think they spend money in certain areas like on furniture. They certainly, it seems like, a lot of people don't spend a ton of money on clothes, except, you know, there are those high-end, like purses and everything that a lot of them want. But it seems like you can get away wearing a sweatshirt and jeans is what I'm saying. You don't have to buy the suits and have all the line of jackets or anything like we used to have when we had to show up to work or something like that. So, you know, I don't know. I think it's different. I don't think they're buying real diamonds. I think they're buying the cheaper fake diamonds. You know, we've seen what's happened to the diamond prices, you know, over time. So I don't know, Todd. It's just crazy to me. It's just because it's all different than you and I know, you know, being older. We can't really understand it. And it kind of baffles us a little. And then I think, you know, we want to get bearish on everything. And I just don't think that's the case. I think we just got to spend more time thinking what is it they want to spend their money on. And, you know, I don't know. And those are just the plays. So, you know, like Eli Lilly with the Ozempic. I mean, I think that's huge. I think people are going to continue to spend the money on trying to look good and trying to, you know, I guess, you know, be more healthy. So I do see that. I think there's other. That's why I said that's probably why Lilly's one of my larger positions. But that isn't anything the market hasn't already factored in. So I mean, I think over time though you're going to see that continue to compound. And you know, obviously I think social media is here to stay. I hate it. I don't like what it's doing to our kids and our youth and the way it's influencing and changing their minds and their decisions and you know, all the other craziness that goes along with it, but I don't see it going away anytime soon, and that's going to continue to influence consumer spending. So,
you know, on that note, though, when you said that about social media, it hit me because, you know, I obviously am on it a ton, you know, for put the report together and stuff, and I'm to the point where I'm sick of scrolling. I mean, I scroll by so much so fast because I know it catches my note, but boy, it amazes me. And even I even throw in my wife sometimes. I mean, they'll stop in the things they read and engage in. I don't read and engage in anything unless it's to go in the report. I mean, there's nothing. I don't care about anybody's opinion and stuff, but it really is surprising me at my age now. That is what life is for a number of people. It is not a positive thing for sure. So,
well, yeah, and that's where I sit. I think it would have been difficult. You know, I give the kids a rough time razzing them up being young, but you know, I think growing up would be harder for you and I if we had all that crap to distract us and influence us. And you know, I don't know. I certainly, my opinion, I wish it never would have came about. But hey, that's just my personal opinion. I'm just not a big fan.
Yeah, the two key words there used is distraction and influence. I mean, that's all. really are. I mean, everything is what you make of it, but they are, for people that aren't got a plan of their own, it is a total distraction influence. All right.
Well, it hit me hard when we were younger. I told you I had to take Jordan to a couple of funerals. Social media just started really coming on like gangbusters, and these kids were in 7th and 8th grade, and two little girls had killed themselves over, kids being mean at night, and the girls had their phone, kids saying mean shit. And, it's sad, though. It's just crazy to me that, that it can do those things to people. I don't know. That's why I said it's a tough one for me to get my head around and be super supportive of. That's for sure. So.
Well, getting back to investments here, you got a new investment I want you to share with us in the ag tech space, which when you told me, I kind of paused and thought, well, I'm pretty sure Kevin and I talked about this. But so tell us about Quercus. The company makes proteins to come off doing to attack new modes of action on weeds. And that's not why I'm bringing it up. I'm bringing it up from an investment question standpoint. What did you see in this? And I think I know what you're going to say that got you back in, because I know we haven't invested in ag tech for a while because of just seeing how it's played out, which we'll talk more about in the next story. But what got you into this?
Yeah. Well, this is the newest. Yeah, we've invested some in ag tech, but
right.
I haven't gone nuts like I was there for a while, throwing money at every new thing.
I guess that's exactly.
But, it's a friend of mine, Matt Crisp. I think everyone knows. I mean, Matt kind of, I feel like Matt did a great job early at Benson Hill, and things kind of went sideways, and Matt, they put other people in place, and then went on their a different route than kind of where Matt had seen a few things, and Matt's out there again trying to rebuild. And he's got a couple of businesses that I know he's got a few that he's consulting for and doing things, but he's got a couple of kind of his babies that he's taken under his wing, and he's trying to get them to the next level. And I like investing in people, and I think Matt's a great person, and I think Matt can build a good team. And it's unfortunate what happened with the Benson Hill situation, and I lost a shitload of money. But I think everybody gets knocked down, and I think some people have the ability to get up, dust themselves off, and go on to new great things. So, I think maybe it's FOMO, Todd, fear of missing out. I think Matt's going to hit a home run. I think at some point Matt's going to hit a big home run. I
don't disagree. I know, and I've listened. This wasn't even about Matt so much as it was about that because you've always told me you bet on people and that. Because I'm wondering how much you even knew about what actually happened, because you don't usually get into the science stuff. You trust the people.
And that's kind of my rule of thumb. Like I always say, and in trading, I tell everybody, and this isn't anything I invented. Math is no edge. I mean, I say that all the time. You hear the great traders say, math isn't edge. So when I go in and look at a new ag tech deal, I assume the science is going to work. I assume you've done your homework enough. I'm not going to debate people about the science of that business model, whether that's from Green Lightning to this Quercus to whatever it may be. I'm going to assume you're going to get it dialed in, and the science part and the math is going to be right. Now, where I did challenge people is on their business model and their go-to-market and product market fit, and who the client, who is their customer. First thing a business needs starters is customers, and who is their customer going to be, and what's their customer acquisition cost, and how long are they going to retain the client, and what's the customer retention rate, and how long, and what's that going to cost us to keep people, and what's the onboarding process like, and what's the ease of use, and is there going to be the ability to create some fires that just spread on their own, and we get some type of ease of marketing, or is the marketing going to chew up all of our money because it's a really long, complicated story to tell? Those are all the things that I'll start to dissect and look at. And first and foremost is, do they have someone that can build a team and really build a team? And to me, that's the most important ingredient. And that's what I had to get through to the kids with the Ag Swag and everything. I said it all comes down to, can you build a team and lead a team and motivate a team and keep them excited about working there and keep them, really moving the ball forward on your cause. And to me, that's the most important ingredient. And I've seen some great leaders out there that are really good at building teams and then keeping people. Thorne would be one when he was the CEO at Bunge. I love what Tarsi does over there at Nutrien in building his teams. And, I've seen Mitch do a good job building the teams out at Meristem, and Barrett and his crew at Holganix, and they've built some great teams. And a lot of people, and Matt Crisp is one on what he did with Benson Hill there. So, I think that it's a harder thing than a lot of people know, Todd. I think building a team is
100%.
Yeah, and then moving your metrics and all of your KPIs and everything else in the right direction, and having the vision to get to the destination where you want to be at. Whether that's you want to have a sale and you want to have an exit in 3 to 5 years, you're looking to build for the long term. I mean, there's just so many variables that come into play. So I sit in and listen to so many pitches from people, wanting me to give them money for this, that, or the other. And I watch a lot of investors come in and want to debate science and math with the founder or the people pitching. And it's like, that's never ends up being the problem. The problem ends up being more of that team building, business building, margins, things that are really similar in every business. You see what I'm saying? That's why the great business leaders, your great CEOs, are interchangeable in every industry. You're sitting here like, how can this guy be a CEO over here at Ford Motor Company? The next thing he's over here at Home Depot or somewhere. You see what I'm saying? But it isn't the products, science, and any of that. None of that matters. It's how you build the business and work the business model, and that's everything. So, that's really where I get and really focus in on. And I think Matt Crisp in this situation, he really understands a lot about building businesses. And, is the science going to work? Is the science going to hold up? I assume it will. And then we can build the business model around that and create, licensing agreements and things around that. And that's what they're trying to do on that front there. So.
Well, let me ask you this, Kevin. As far as I know, you got a trading background before you did what you did. So where'd you get all this business insight?
Yeah, no, that was the whole key to the equation. I honestly didn't know shit about business and building. But I thought I did. I mean, I thought I did, Todd. I had a self-proclaimed, like I was a genius, could build a business. But I've had several business failures throughout that. So I go there, trade, start investing, get lucky, hit some trades, do good on the investing side, hit a few things. But then I started to invest and build my own smaller business, whether it was from home building to developing to multifamily to log. I mean, we've done everything, restaurants, bars. We've had damn near almost every business you can think of, and a lot of them have failed. But I met a guy, like I said, long story short, I met a gentleman who became the CEO of Payless Castways, the lumber yard through the Midwest. And they were all through the country. His name was Dave Krumholtz. Dave became a great friend of mine, and I lost my ass in Payless trading that stock all the way down to when it went bankrupt. And I remember meeting Dave and, I tell the story to everyone. I was like, oh my gosh, I want to punch this guy. And then we end up being great friends. And he worked with Bob Nardelli. Nardelli was the CEO at Home Depot, and Nardelli then became the CEO at Chrysler, and they would work together through the years. And Nardelli had worked with the great Jack Welch at GE, and all of them came out of the same little group. And then, Dave ended up, he did a business consulting business with Nardelli. They had some business consulting. They did a high-level business consulting, and Dave kind of took me under his wing for a few years and really taught me everything he knew about building businesses. And that was my epiphany of, that changed everything for me and for our family and everything else, because I got a whole different perspective and vision of how to build businesses. And I was nowhere close. I'm just telling you, I wasn't even in the ball game. So, Todd, we talk about retiring or having some classes or some courses. I mean, me teaching people about business model, that would probably be, I guess, what my favorite would be.
I already wrote that note down. You're 100% on, brother.
Yeah, because trade, even my dad, Michelle's dad, was, hey, what's trade? What should I put my money in? Hey, what's trade of the month? What do you got? And I always felt bad because, you don't know how that's going to play out. You really don't, and you hate to give someone advice on something like that, and then it just go to crap on them. So, I never would. I rarely would. I never traded my parents' money. I never traded Michelle's money, and they've always asked me to, but I just never wanted to, and just made my belly hurt, I guess. I worried more about them losing money than I worried about myself losing money. Let's put it that way. You know what I'm saying? It really is harder because, God, you would probably have a bellyache more losing your folks' money than losing your own, don't you agree?
100%.
And, and it's just, you don't know for certain. But I know for certain in this business model. I mean, I know what's right and what is wrong. Now, I'm not saying we can execute all the time. You know what I mean? It's like a diet again. I know what I should be eating and what I shouldn't be eating, but I can't guarantee that's always going to be. That's how it's always going down.
Right.
But in the business world, there are rights, wrongs. Just look out for this, look out for that, and think about it. I mean, that's what's really helped us with building a lot of these businesses out that we build out, whether it's AgFrag or this, that, or FarmCon or whatever it may be. And you really those are things that no one taught us in school, and nobody taught me ever in life, and I certainly didn't learn it at either the Board of Trades or any of the exchanges I worked at, or my trading world, or investing. So I was blessed to get the relationship with Dave, and him introduce me to the people he introduced me to that really understood a new business. And then that's, like I said, that's what I focus on when I'm looking at making an investment, or I'm looking to build out our own businesses. So I think those are important, very important tools.
Yeah. No, I wanted to share that because it was important, and no one did tell that, and you always threw that at me towards the end of my career.
Well, here, I want to give everyone an example of just like what, say, Dave taught me. He used to have donuts with Dave. He would have it at every company that he was the CEO at. But anyway, let's talk Payless Cashway. Just an example. So Payless Cashways, they were a lumberyard. They were a hardware store prior to, say, the Home Depots of the world coming in, and they thought they had it all figured out. And let me explain this to you. And they became an owner-based, employee-owned company because they thought, and they thought they had it dialed in. Dave thought he had it really dialed in. Every Payless Cashway was set up on a rail. So they were able to cut out the DC, which means just the distribution centers, right? So they cut out the big distribution warehouse centers. They didn't have to have any huge 200, 300,000 square foot facilities and ship everything out of there and all these DCs all over the place. So they would put every one of them on the rail and then just unload the lumber, everything right off the rail, and it cut down a huge amount of their cost. And they wanted to target, listen to this, their target market was the small to medium-sized home builder, not the mom and pop, not just a home repair guy and this, that, and the other. They were targeting, at that time, people like myself that were building, say, between, 5 to 45, 50 houses a year, right? So that caliber and tier of a client. And so their theory was we put these hardware stores on these rail lines. We cut out the DCs. We have the quickest, easiest access to lumber right off the rail. We carry all high-end tools and equipment. Remember, everybody's like, if you're a real contractor, you're going to Payless. Remember back in those days. So it was like, you weren't going to True Value. You weren't going to some of the other smaller hardware operations. Payless held themselves out there as like being the one that the daddy contractors buy their tools and materials from. But here's what happened. And Dave said the reason they were dead right on everything except one thing they never thought about. They could never service that higher-end contractor. They could never get the people hired that could service that person. And here's what would happen. Dave would say, a guy like myself would come in and say, hey, here I got these blueprints. I'm building these 30 houses over here in this one neighborhood. I need you to take about 8 degrees off the pitch on that roof, and I want to trim that doghouse out and bring it down. Because if you lower the pitch on the roof, you can save a shitload of money as a builder. And I want to drop that down a touch. And they didn't have people at the store that could change that, on that blueprint and understand what amount of lumber to cut out of my bid. You see what I'm saying? They didn't understand reading blueprints real well. They couldn't hire people in there. They were hiring the retired shop teacher, or like Home Depot hires. And so the model was simply just wrong. And Dave looked back at it and said, we were just wrong. The hardware business is all about location. And so that's where you've seen the Home Depot people come in, build in a prime location, not like Payless. Payless was oftentimes off the beaten path because they wanted to be next to the rail. So Home Depot comes in, and their target market was just you and me doing a quick home repair on the toilet, sink, remodel in the bedroom. And so they stocked things with super high margins. You see what I'm saying? Where Dave and Payless,
yep,
they weren't selling things with super high margins because they were selling to the upper tier, the guy that was doing a lot of volume. So it's just like your fertilizer companies, right? If they want to cater to the farmer that's doing huge volume, well, their margins are going to be shit because that guy's going to beat the hell out of them, right? The bigger farmer beats the hell out of these people. You know what I'm saying, Todd, on
yep,
that?
absolutely.
Because they can, or they'll go direct. So what I'm saying as a business owner, it's not necessary. You really don't want to go for the heavy user. The heavy user will chew your shit up if you're early in your business modeling, because they'll take all the margin out, and you won't have the people to service them, and you'll be running around chasing your tail like a crazy person trying to service these higher-end clients and heavy users, but you'll have no margin and gross. So you'll basically strangulate yourself out. So you got to work up the customer continuum, and I could go on and on for days, but you see my point, how business modeling is just so important, and knowing who your customer should be versus who it shouldn't be, and just so many times the mom and pop business owners get that wrong because no one's ever explained it to it. No one's ever told us what we need to be looking at or how we should be looking at it or things like that. So, that's all tricky stuff. And we don't know what we don't know. So it's like, where would we ever hear it or learn it? So I was blessed to learn lots of those types of things from Dave and really strategically look at businesses in a different perspective.
Yeah, and I think we got a subset of clientele that no doubt would benefit. We need to get that information out. So that's something I'm going to work on. I'll talk to you more about it later, but I know people will love it because you helped me out a lot. I mean, I remember, never forget, after I lost my job, I came to you, and we got talking about things. You're like, dude, if I had to come to you, a year ago and said, basically just say some of the stuff you just said about, trying, he goes, what would you said to me? I wasn't ready for it. Wasn't going to listen to it. I need much input. Besides that time, I was such a hole. I was so defensive that, you ain't going to listen to me. But if you know that going in, you can have these tools. I think it's hard to fail if you just apply them consistently. So great stuff, Kevin. Great stuff. Let's one more thing before we call it a day. It's been a great conversation, but you touched on a couple things in last week's story. It was titled, Will Artificial Superintelligence Be Humanity's Greatest Invention or Our Last? And you admitted to having some big concerns, which you'll share with me here in a second. But, yeah, so touch on those, because then today we wrote about the quantum apocalypse and what it might do, and I'd only heard of that, and I saw it, and I'm like, this is kind of interesting. I have no doubt it's probably true. So just give us your feel. Share with us your big concerns. Play it out in your mind how you
around our house, it's kind of a two-sided debate. I'm the eternal optimist. Michelle calls me Mary Poppins.
Yep.
I think everything's going to be great. She thinks AI. She thinks it's the end. It's the beginning of the end, so to speak. That's probably your camp as well. I mean, you're more.
Shut up.
Yeah, I'm just saying you're more of a doom.
No, I know. You used to be. I've come around. I know what you're saying. Go ahead. Keep going.
Yeah, and I'm not saying Michelle is doom and gloom, but she's definitely worried, and it's just so much. Everything's just so much different than from our past, and we look at the things that we feel made us great, and if all that's going to go away, then how are these kids going to turn out the way they turn out? And, I don't know. I don't know, Todd. I don't have the answer. I want to believe that. I think AI is going to be great. I think it's going to retool a lot of things. I think it's going to help people become smarter and smarter and, do bigger and greater things. I think I think it's going to improve health. I think it's going to improve everything across the board. So I'm more of a, I think it's going to be great. I think it's going to be different at first, which is, whenever change comes about, it's always a little bit painful just because you're knocked out of your comfort zone. And when you're knocked out of your comfort zone, I think that's what scares a lot of folks. But I have I painted on my wall at my old house in my bathroom when I brush my teeth. It's just, life really doesn't even happen until you get outside your comfort zone, and that's when things really start to move and shake. So every day, I like to personally push myself out of my comfort zone, and Todd, that's been my theory. Ever since you came to work with me, I remember you were parking because I said, hey, do something different every day. Park your car in a different spot. Drive a different way to work. I don't care. Do something different. You don't want to get stuck in the ruts. And it's easy to get stuck in the ruts as we get older. I find myself bucking and kicking a lot more when I make myself get out of my comfort zone, right? I just like, why did I do it? But I need to, because you just get too set in your ways. And when you get set in your ways, it affects everything. From your physical health to your mental health, and it makes things difficult, I think. So I'm constantly trying to shake things up, do things differently, and take that stance. So I like this AI stuff. It's challenging for me. I tell the kids, I'm like, look, I know I'm not good at all, but I'm they've forgotten more than anything than I even know about it already, and I'm sure that's only going to get worse. But I keep pushing myself to try to use it, try to learn more about it. So I'm an optimist. I think it's going to be great. I think it's going to retool a lot of things. I think it's going to change the way people think, the way people work, and some of these jobs that are out there. But overall, I'm an optimist about where we're headed with AI. I don't like the part that really screws me up is I see what's happened to our youth and the mental health of a lot of our younger people. Like Andy and I and a bunch of my buddies all talk. I'm not saying there's anything wrong with it. Each to their own. But we don't remember so many people being on all these meds like when we were kids. You know what I'm saying? When we were young.
Yeah, I did.
20s, 30s. I don't remember anyone going and I don't even remember anybody, Todd, when we were in our 20s or 30s saying to me like, boy, I have anxiety, or boy, I'm battling depression.
No, it was
I just
not.
don't even remember that. Yeah.
Now that you tell you that it was undiagnosed, what I tell you now. But yes, I'm with you.
Well, yeah, I would have had everything if help. My parents would take me.
100%.
I had ABCD. I had it all, bro. Yeah, I probably had everything. And so I don't know, though. That's where I'm saying I worry that if AI is like social media on steroids or something, I worry about that for the kids, you know what I'm saying, and the youth. Like, how will AI, if social media is already kind of, I think, hurt them mentally or from an emotional standpoint and a mental standpoint, psychological standpoint, and if AI is even worse than that for them, that's going to be a bad deal. But I don't know. I'm hoping that we get some guidelines or some bumpers put in place on some way.
So the quantum, right? And on that note, the quantum apocalypse story kind of got me because it reminded me of, if I read the story right, all the passwords and everything are potentially going to be exposed, and all the data may even already been harvested, just waiting to be able to grab once they get the passwords, once quantum physics or quantum computing gets there. But my first thing I thought about was back, 1999, how we all feared going to 2000, computers were just going to not work anymore. So you got to believe these smart people are going to figure something out where they transition to where quantum protects us versus quantum being the one that unlocks everything. So there's that. But then from an investing standpoint, you listed a number of companies. Do you plan to in the near future get on board early and invest in some of those companies that you listed today?
Oh, like Anthropic, or you're talking OpenAI, some of those getting in on the IP.
Well, hold on. In the because in that story when you were.
That story, with a lot. No, I am not invested in those. No.
Okay. Yeah,
I'm just not. Todd, here's my. In the last couple of years, this is kind of where I've shifted all of my investing towards. I take half the money and throw it basically in these bigger ETFs to give me some broad diversification across markets. And then I probably try to select anywhere from 10 to 20 individual stocks or companies. And then I'll just, I'll throw 10, 50, $100 grand into that company and I just go to sleep. I mean, and so that tweet we ran this week of the top biggest brands, in the world. I told Jordan there might be a portfolio plan, just putting your money in the top brand, those top U.S. brands. I don't trade foreign stocks. I just kind of made that my rule. I have had learning experiences on that. I don't like it. And I was just listening to what other people were saying, and it was stupid. It was just I'm following, I just listened to some other folks. But I sit here and I think, you take and you pick 5, 10, 15 companies that your family, you really like, you enjoy, you believe in them, you trust those brands. You put your money in those individual stocks on the breaks or the pullbacks, and go to sleep and check back in 10 years. It's the same theory I said to you before. I love Warren Buffett's line. Every night when I shut my computer off, I want to think, am I comfortable if the market didn't open for another 10 years? Do I like the companies? And so that's where I have half in the ETFs, and then the other half I have in, they're just no-brainer type companies to me. It's your Boeing, your Meta, your bigger brands that people are going to use and like. So that's kind of where I'm at on that. So I don't go dabble a whole lot off in the weeds like you asked me on some of those, because I just don't know. I think things are going to change so fast and so quick. I just had an opportunity. I was on a call yesterday, Todd. I should have said that. On a call yesterday to invest with a group. Won't name any names, but anyway, they're putting up huge private money for a lot of these large defense companies that are coming out there and popping up. Whether and making loans to these large defense companies that are trying to get contracts with the government, coming out with all this new AI defense technology. Well, I just worry that the AI, this technology is coming on so fast, you could be relevant one moment when I give you money and give you the loan. 2 days later, you're irrelevant because the technology has changed so fast, and especially in a space that's dictated by political changes. So not only do you have a layer of change from technology, but you got a layer of change from politics. And I'm like, no, there's 2 layers of changes there that I just don't want to mess with. So I'm hesitant on some of that stuff, Todd, just because the rate of change and how quick it's changing. I just don't want to throw my money that way. And there could be some huge home runs. Don't get me wrong. Some people may, it's like a lottery ticket. You may hit a mammoth home run there, but it's just not where I'm at in my life.
Well, no, I think I got a full grasp of how you operate. And it made me think that, I think that just, when I was growing up back in the day, when even you saw it, all the day trading stuff, it was like that's where the action is. That's where you saw the money, the movies, and I realized, no, man. I mean, building wealth is really a simple, long-term process, and that's why, as you always say, quote, doing nothing is doing something, and it's the hardest thing you'll ever do.
Yeah, a lot of times just sitting in the positions that you're in, and like I said, I would have a hard time sitting in NVIDIA if you were in it for 10 years ago, or sitting in Bitcoin 15 years. It's hard to just sit, and watching the ball. But that's what you have to do if you want to be a longer-term investor and player. So,
and that's when we define what we're doing. That's key, man.
Yeah.
Good. That's what I got today. Great stuff, brother. And you got anything else you need to talk about?
Were we talking about the risk-taking thing? Did we have that on the list, Todd? At the bottom.
Hold on a second.
And it was just something that you had asked me about before, is how fast can you know?
Yeah. We ran the quote a couple days ago. Failure is not the opposite of success. It's building block success. And that took me back, and I saw that. I immediately thought of the stories you told about failing fast. And, dude, I didn't get it because no one taught me this. And you said all this stuff to me, and it went over my head. Then you tell me the stuff you did, which I want you to share now, how you, after you learned it, and how you walked your family through it. Because it sounds crazy to a lot of suburbanites, but I get it now. So, failure. You felt
I say it's always about, I remember what the hell is that? Remember that crazy owl or something that was on that lollipop commercial? How many licks does it take to get
how many licks?
And I always sit there and say, how many failures does it take? Whether it was teaching Jordan to become a switch hitter in baseball, or teaching him, various positions in football or basketball or whatever. It's like, hey, look, it's going to take X number of failures for you to become even remotely good at this. So the quicker you can get those failures in, the quicker you get to the prize. And it's like trying to unlock a safe. I always tell everyone, because Todd's a walk, crawl, run type of guy, and I'm not. I hate walk, crawl. I think you got to just dive in and go after it. And I always say I want to be the guy that can fail the quickest. And so if I'm trying to crack a safe, I mean, I want to dive right in and just start dialing combinations as fast as I can, and try to so I can figure one out. Where, other guys might want to sit back and study it. The Abraham Lincoln line. I'm going to sit and sharpen my blade for hours before I start chopping the wood, which I understand. But for me, I just think you try to get in as many failures as possible. And I used to always tell the kids the same thing, I don't want to steal the Sarah Blakely line from Spanx, but her dad used to ask her when she came home, what'd she fail at? And, I did similar to the kids. I got it that you're going to have success and all that. I want to know what didn't you succeed at today, because then I know you're pushing yourself outside your comfort zone. And, I think that's the whole key. And I sit there with my kids now, and I'm proud that Michelle and I really, really pushed him, whether it was making Jordan take tap dance. He hated it and wanted to kill me, and then I had him switch from there to go take the piano.
I love it. Yeah.
I'd take him from football practice to piano. I mean, he wanted to kill us. He hated it, and but it always pushed him out of his comfort zone. I one time made him get in a jump rope contest. He couldn't even jump rope at all, and I said, "You got 6 months. You're gonna be in a jump rope thing, So, and then he figured it out. He got really good at jumping rope. So, like I said, I just thought it was important to teach him that. And for me, all of my successes in life came from I'm talking a ton of failure. And I tell everyone, the only reason I was ever on stage talking to a group of people is just because I failed more than anybody in the room, probably. I'm being honest with you. And then that gave me a little bit more ability to see around some of the corners, because I had done it a lot more times and failed a lot. So, I'm just a big proponent. I love people to get out there and give it a shot and give it a try. And I'll be the first person there to dust them off and say, man, pat on the ass and get back in there and give it another shot. And I think that's what it takes. So I don't coach kids up to be right, correct, or anything. I like to put them in positions where they can fail and then try to help them get back up, dust themselves off, and go at it again. And I think that's what they need in life. So, that's always been Michelle and I's kind of play and go to. And as I say, put them in things, make them get out there and make them fail. So, and the more they can do that, the better off they're going to be when they get older. Get them a little calloused up, my pops would say. So
I think we're witnessing a couple generations of kids that did not have that training, my friend.
Well, yeah, most parents and Michelle and I were young parents as well. And you don't want to see your kids struggle, and you want to make it easier than you had it to some degree. And that's how we're biased, but we have to sit down and build a plan. And we said, look, we don't want that. What we want to do is give our kids the tools that they're going to need in life. And we always thought those tools are going to be, it isn't a matter if you're going to get knocked down. You're going to get shit knocked down, right? Life's going to deal you cards. You are going to get knocked down. There's no question. And the prizes, to me, go to those who doesn't even faze them. Get knocked down, brush yourself off, jump back up, get back in there. And that's just what we've tried to really just teach. And I just feel like the more you can get your kids those experiences while they're under your roof or where you can still kind of help them, the better you're going to be. Once they're out, then it's going to be tough for you to help them. And so I know it's hard to see the kids crying or get dejected or they don't win the prize or everything from building a soapbox car. I told Jordan, I'm not building a soapbox car. You're building a soapbox car. Well, when we show up, it's a parent night thing. Well, of course, Jordan has the shittiest looking car possible compared to the dad that's over there that built the entire car. So yep. Michelle, it's hard a lot of times. And I just said, hey, look, this is life, man. You're going to pick yourself up and get back in there, and you're going to be fine. You be proud of what work you did do, and here we go, and learn from it and move on. So, like I said, it wasn't always easy, but I think in the end, it's giving them the tools to get fazed by rejection and failure. So yes, they get fazed, but they don't just, like some of these kids that we hire today. I mean, Todd, they just crumble when you give them any constructive criticism.
I've seen it.
And that's sad.
Working out.
Because I sit there and I'm like, boy, if you're going to crumble from this, what are you going to do when something really shitty happens, or really difficult comes along? Because life isn't easy. That's for darn sure. So,
Yeah, a lot of people miss that message. But no, good stuff, brother.
Yeah.
Appreciate you sharing that with us. And I've seen it play out, and kids are doing awesome stuff. Awesome stuff. Well, bud, I got nothing else. I guess we will touch base next week.
All right, my friend. All right, have a good one, Todd. See you. Bye.